what's up, you guys? Welcome to the Mango Grove. My name is Krisha, and this is today's Bitcoin analysis video. Do you guys see how happy I am? I finally have Sean next to me. I had to bring him up, by the way, from the gym. He's been pushing. He's got to make up. Someone's got to make up for Bitcoin's lack of gains. So Sean, don't worry. We're seeing a pump on the chart now. You can just
I can kick back now.
Yeah, make me look a little good. Got some work to do myself, but
yeah, this girl been deadlifting more than most guys in the gym.
Gotta work out, right? This is the time, guys. Bear market phase is where you build yourself. Your accounts might not be building you, but this is your time to build yourself.
What are you talking about? This is a bear market?
Not for us,
Okay.
We got bull run signatures.
Exactly.
Okay, I've been going over those signatures with you guys now for some time. I hope you guys are on the same page as me, but this should not be a bear market for you still. But hey, let's not...
high lows, man, on the weekly.
Yeah.
Weekly still has high lows.
It's a beautiful chart. But I'm currently on the index chart, so let's get on over to something more presentable. Of course, I got lines on this one. Is there something else? Bitstamp. Okay, this is relatively clean. All right, we're going to start with this. A lot was spoken about in my previous video. Specifically, Sean, we got a 2-day golden cross. Okay, let's go ahead and very quickly bring that up. I think that's a very, very important macro signature.
No. The only macro signatures that matter are the bear macro signatures. All right? Let's ignore everything else. Okay? Let's ignore all the bullish signatures that happen once every cycle, like this golden cross, that people decided to ignore the previous bull market too, by the way. Let's ignore the weekly 200. Let's ignore everything else and just look for 13K, because people called it 2 years ago, it needs to hit. Until then, no bull signatures matter.
Like,
your indicators only matter when they line up with your thesis.
Correct. It's not there to keep you objective. I mean, who needs indicators to keep you objective?
Exactly.
It works the other way around. But no, it's the same. It's sort of rinse repeat, guys. And this is technically what happened in the last bear market as well. We were sitting at 3K. And everyone was gunning for 1.5K, 2.4K. And I still remember those targets. I can't believe it. But anywho, this is a very, very important bullish signature that's gone off on Bitcoin's chart. This is something that I've gone over with you guys, well, in our last video, right? I told you that, hey, we have a confirmation on the golden cross. Now, what really makes up that golden cross? It's your 55 exponential moving average and your 200 exponential moving average, both of which we have on our charts right now. And you can see that it's confirmed, Sean, confirmed cross. And I backtested this in 2 videos prior to this one. Backtested to find that this only happens once every bull run.
Yeah.
Right? So, and it's crazy. Like, just do the backtesting, do the work, and you're going to see the importance, the significance of these things going off. So we have the cross, and what do you know, rally to the upside. Right, now there are a few other things that I'd gone over with them on this chart. I want to know your thoughts on, is there anything that you are seeing on the macro landscape for Bitcoin?
When you say macro, you're talking about the higher time frames.
Yeah, higher time frame. Something that is good for positioning. Okay, every time I use the word macro, guys, I need you guys to understand the context here. The context is always to position. How are you going to position getting into the next phase of the market? Markets move in phases. Okay, it's all one cycle, but each cycle has a phase to it. It's about understanding where to position depending on which phase we're on. So now, given the macro backdrop, you're able to identify which phase we're in.
Yeah.
So based on that, is there anything that you are seeing on Bitcoin's chart that could...
So on the positioning standpoint in regards to non-leveraged trades for longer term trend trades too, right? Even if these are like lowly leveraged, the one thing I've been talking to you guys about, very, very simple strategy. I went through it with you guys. I back tested it with you guys on a live stream, is that 10 simple moving average and 21 EMA strategy, right? As long as the 10 simple moving average is above the 21 EMA and price is above the 21 EMA, you remain long, you remain in your spot trade. It's very, very simple, okay? And we've had multiple opportunities now. Go ahead and put it up for them, Krisha. Yeah. Go ahead and pull it up. And there you guys can see that we crossed I'm going to take the mouse over here. We crossed the 10 simple moving average, guys, which is the white line above the 21 EMA over here, okay, at this juncture. At the time, price was sitting at around like 23,000. Then we had the pullback into the 21 EMA, right? And this was when I did the live stream. Okay, I went through a strategy with you guys because I've used this strategy for multiple years now, multiple cycles, right? And I'm like, guys, at this point, based on our strategy, which is, again, I'm going to go over it with you guys, as long as the 10 is above the 21 EMA, white is above the yellow, which means the 10 is above the 21, and as long as price is above the 21 EMA, you stay long. You don't need price to stay above the 10. You just need price to stay above the 21 EMA. And if the 10 is above the 21, you stay long. All three conditions hit over here, and all three conditions have stayed activated throughout this move. Now, if you had lost the 21 EMA over here, that strategy would ask you to get out of your position, or basically at least start scaling out of your position. As soon as you have two candles underneath the 21 EMA, you exit your position for sure, right? And again, we bounced off that 21 EMA moving average. But over here, guys, not only did we have the 21 EMA moving average, but we had Krisha's golden cross, we had the weekly 200. There was so much confluence over here that you just couldn't go short, right? It could have broken. It could have broken, right? But your strategy shouldn't allow you to go short over there. The probability makes it a very hard trade. I was short-term bearish. Don't get me wrong, guys. I was short-term bearish, and I still am until I see a few signatures get activated, which is on the 12-hour. I want to see the cloud flip green, right? On the daily, I want to see the bullish TK cross. We're getting that now. Like a couple of days ago, we saw the daily close over the Tenkin. Yeah. Right. You can go ahead and show that to them actually. Right. That was like, oh, okay, cool. That's beginning to play out.
Just a bit slow. Okay, there it is.
Yeah. So right over there, 2 days ago, we closed the Tenkin. Now the Tenkin has come underneath, and so that's good. The structure over here is looking good. I want to see the Tenkin cross back over the Kijun. Now, those of you who have been following Mango since back in 2018, 2019, you guys are seeing what's happening over here. One of my favorite trades, the double TK cross above the cloud. We're about to see that. If the Tenkin crosses back over the Kijun, guys, we're going to have a double TK cross above the cloud. That's going to be ultra bullish. So we're not there yet for the short term, right? But we're getting there. Longer term, though, the weekly is a longer term strategy, right? The 4-day dynamic is a 4-day dynamic Kusha held as well. So there was so much confluence over there for the higher time frame trades, right? But for the lower time frames, you kind of had to stay with the bearish trend.
Yeah. So and going back to that point, when you're looking at your indicators, they're there to make sure that you are objective when looking at the chart. Okay, don't try and trick yourself into anything else. Your indicators are there to keep you objective at all times. Now, this is the macro view for Bitcoin. We're seeing continuation on this trend. This 4-day candle has been it's a beautiful bullish engulfing candle that we're seeing on Bitcoin's chart. Usually when I see this, I'm looking for further continuation to the upside, which now brings me to my next point, which is and there's something that you had brought up in the Mango Grove Discord chat as well earlier today, which is that pattern play.
Okay, the fall.
Right. And I urge you, for those of you not in the Discord chat, this is your time to get into the Discord chat. Okay, you can enter for free as we get into well into the rest of this bull run. And yes, I'm still sticking to my guns. I do believe we're currently we started the bull run. As soon as we get underway into that phase of the market, we will be closing out the Discord chat. Okay, so this is the time to get in. You'll find a link in the description below. But let's go ahead and then pull up the Discord chat quickly. Just give me a second. Perfect. And there it is. All right, so Sean, you had brought up this this pattern in the Discord chat, right? Which was a falling channel.
So I've been talking about this now for a few days, where what essentially was happening was another cascading pattern, which is a variation of the larger cascading pattern that we've been talking about since November, December, right? The one that broke up from 17K all the way. The measured move was 24K, and then eventually 42K for that play. Now this is another cascading pattern playing within that trend, where we have a failed breakdown and a break back up that is pointing to the top of the wedge. We hit the top of the wedge. Now it looks like we're breaking above that wedge, which is a bit of a difficult play to play, right? I'm not playing it myself because it's a diagonal line. I don't like playing diagonals.
So let's go ahead and check that out, because I think this is a very it's an important sort of setup, right? What's happening here, because in the previous video I presented a smaller 4-hour pattern to you guys that actually said, I told you guys that, hey, this is a cup and handle. If it breaks to the upside, we're getting to the top of this wedge. Right now, this is the wedge. For those of you who are still not seeing it on the chart, you'll find best on the daily time frame. So get on over to your daily time frame, draw out these diagonals on your chart. Okay, now I'm not seeing the break, Sean. I'm not seeing the break here. I don't think it's broken just yet.
It depends on how. That's why I don't play these diagonal lines, because the way someone draws it could again, it's a very subjective way to trade, right? You want something more objective. The Kijun.
The daily Kijun?
Yeah.
Okay, yeah, there we go. There we
Right.
go. Let's go ahead. It's my chart is taking a bit long to load. Okay, there it is. And what do you know, guys? No, okay, so the Kijun, guys. So now this is a good sort of tip on how you guys can play diagonals, okay? If you're a pattern trader like me and you still want to have a bit more juice to your pattern, especially if there are diagonals, look at any other key indicator that you have on your chart. Now, we rely heavily on the Ichimoku cloud, right? This is one of our base layer foundational concepts that we use here at Mango to keep us objective. The Kijun right now, guys, is coming in at around, what is this? 28.4K. Okay, so that is going to be your guide to really determine, okay, is this breaking to the upside or not? All right. So right now we're getting rejected off the Kijun, but Sean, in addition to this, there's one more macro. We're closing a month. We're closing this month in 2 days. No, 1 day actually. We have one more day, and then today after tomorrow we're closing the month, right? And if I take you guys on over to the monthly time frame, what is that one level that we have been looking at now? Guys, monthly 21 EMA. Monthly 21 EMA. We clear monthly 21 EMA. This picture suddenly is looking good once again.
That's
right? We've been giving you these key levels.
Okay.
Go on.
No, apologies.
No, go ahead.
I haven't, guys. I legitimately did not expect Bitcoin to hold the monthly 21 EMA last month. Okay, I was like, okay, we closed above it, but this one, it's not a big priority to hold it, because typically you don't until the 10 SMA crosses above. Again, guys, the same strategy I explained to you guys on the weekly. You can kind of use it on the monthly, right? You want to look for the 10 SMA to be above the 21 EMA, and until then, I don't look for the bulls to hold the 21 EMA. But as they continue to do this month after month, if they hold it again, that 10 SMA is going to start sloping up even more aggressively. Yeah. It's going to cause that 10 SMA to cross above the 21 EMA faster, which is going to line up with my, okay guys, in November to December, what I say, I'm like, the quicker we go up to 42K, the quicker I'm going to be selling, right? The longer we spend at around 30K, allowing for the equilibrium to play out, well, at that point, I get ultra bullish looking for new all-time highs before the halving. And we're beginning to start seeing the signs. It's not there yet, but it's beginning to, guys, if you're on a C program, go ahead and check out the seed setups higher time frame. I've laid out a couple of pieces of the puzzle that I'll be building on soon, but man, I'm beginning to get excited.
It's exciting. It's exciting. Okay, so that's why keep your indicators there. Let them help you be objective in this region of the market, okay? Don't get too fixated right now on the whole macro landscape and stuff. Ultimately, price is going to be the arbitrator of all debate.
Exactly.
There we go. That's Sean's very, very famous, very popular line that I just, wow, that's amazing. But no, these are your two guys right now, guys. Monthly 21 EMA, important for the next 2 days, okay? So keep your eyes on that.
You guys got to be dynamic. With price and your indicators, okay? Let me tell you, the previous bull market, I was looking for 100K just like everybody else. I was looking for 200K, I was looking for 300K, I looked for 600K as long as price was going up. But as soon as we lost our monthly 10 SMA, scroll out. As soon as we lost our monthly 10 SMA during Christmas, I was like, oh God, no. Well, while that month was unfolding, I was like, guys, the only thing I want for Christmas is for Santa to close Bitcoin above that 10 SMA. Because as soon as we did that, I couldn't help but have my heart crushed, because I knew that this was a big effing sign. And then what happens right after? Look at like a few months after. Look at the month, Krisha, where we closed underneath the 21 EMA.
Oh,
that was the look how clean that was, right? Someone asked me that month, Sean, does this count? It's very, very tiny. No, it counts. It effing counts. Look how we tested the Tenkin right after that, and boom, down. 3 AC got liquidated because we lost the monthly 10 SMA, right? Don't make the same mistakes this bull market, guys. Follow your goddamn indicators. Be objective.
Bingo. But now let's just say this pattern actually plays out. We get a break of all of those beautiful, beautiful regions of resistance, particularly the Kijun, okay? Where does this take Bitcoin up to first stop, okay? I'm just going to take the measured move of the pattern just to give you guys a target to the upside, and we're getting all the way up to 31.6K, okay? First target 31.6K. So yeah, I'm saying at this point, Bitcoin actually does look like it wants to see continuation, although you want to get the high probability trade set up. Look for price to, number one, either come down to test a critical level like the monthly 21 EMA, something that's going to be easy for you to manage a trade on because we close that in 2 days, or I'm going to try and stay away from the breakout trades. But if we take out the Kijun, right, if we close a candle over the Kijun, that's when I'll be looking for a continuation to the upside. So gun for the high probability trade setups, and make sure to have your invalidations at play. Sean, is there anything else?
Yeah, here's the play, guys. Here's the play. Watch it play out like an orchestra. We are going to break past the keys, that. We're going to break this wedge to the upside, whether it happens today, the after, etc. Doesn't matter. As long as we hold the monthly 21 EMA, look for this wedge to break to the upside. Tap into that liquidity above those highs that Kusha just marked out, right? Around 31.6K. At that point, look for a pullback back into the TK cross right above the cloud, right? Yeah, pullback right there, boom. That's your long play over there, right? In case you're not already in position. Now, we are already in position, but I've been looking to add on certain criteria. That criteria has not hit yet, but if we get a play like that, that's an add opportunity, right? Suck back into the TK cross and then continuation. Now, doesn't really need to play out that way, no, keep going up, right? But look for another trade then. We'll have other trades, right? Keep that gunpowder, right? I've been waiting patiently for Bitcoin to come down to around 23K, 24K. If we do get that, that's a high probable play where I was going to buy. If it didn't happen, I had contingency plans. Bid certain altcoins I'm looking at, or look for this play if altcoins don't look good either. But don't just FOMO. Have a plan. Let the trade come to you, right? Hey, the trade I was looking for did not come to me. I'm already in position from like 19K, 17K, so we are good. The next ad needs to be good as well. That's one of the mistakes I used to make in my previous bull runs, where I was like, hey, I got such a good start to my trend trade. I'm just going to buy anywhere because I have a good buffer. Not making that mistake again. Because that buffer that you take for granted, it starts adding stress to your trade when you start adding whenever and wherever.
Yeah.
Right.
Yeah. So heed all of these little golden nuggets from all of our experience trading
from
these
all
markets.
Pain.
Pain. Yeah, that's a good one. So yeah, guys, this is honestly, we're gonna keep this short today. Okay, just keep it simple, stupid. And
hey, I want to talk about a couple of other things.
Okay,
Since you have
on.
the Discord open, can you put it up again?
Yeah, I'm right here. He's like, hey, Krisha, can you ask me? Okay, yeah, tell me.
No, is it? Can they see it?
No, not yet. So tell me, what do you want me to
scroll up the CMEs thingy.
Okay, this?
Yeah.
Cool beans. I gotta show the right parts,
okay.
you know?
I see.
Yeah.
Okay.
Yeah.
I get it. Okay, so click this. We've been talking about this on our Discord too, guys, of how the probability for a rate hike has been like, it's been extremely volatile, and this has been causing stress in various markets. But interestingly enough, okay, even though the probability for a rate hike has not had at one point gone up to like around 75%, 85% at one point too, okay, the markets kind of shrugged it off. You're seeing what Nasdaq is doing, right? You're seeing what Bitcoin is doing now, right? So this is an interesting development where the market is kind of shrugging off what the Fed is likely to do in regards to rate hikes. A very, very interesting development, and we might be on a cusp of a narrative shift where rate hikes may not, like Fed speak may not do what the Fed wants, and rate hikes may also be, the market might be saying something like this, you know what, at this point, we don't even care. You've raised rates so much that the few percent extra that you raise is not gonna be a big difference. And hey, we are predicting one of two things happen. Inflation comes down drastically, or you push the market into a recession. You're going to break something, which is why I think the market starts pricing in lower rates sooner than it actually happens. We see a potential huge run in all risk assets, including Bitcoin, sooner than people expect, all the way till the end of the year, possibly into the halving. Halving, we see a dump. People won't expect it. That's when the rate hiking cycle starts again, and hey, boom. That's how things are. I'm just brainstorming here, guys. That's how things are kind of playing out in my head right now. We'll keep you guys updated.
Exactamundo. We'll keep you guys updated. And I hope you guys enjoyed this video. If you did, if you guys like these duos with Sean and I, both on camera, on the screen with you guys, having this party, sipping on gin, well, let us know in the comment section below. And if you guys like this information today, make sure to smash that like, and we'll see you in the next update. With this, trade safely, trade stress-free, trade the mango way, trade the easy way. Ciao, you guys.